Moving on, Tata Steel MD and CEO TV Narendran says China growth slowdown is affecting prices, seeing strong growth demand also continuing for the entire steel pack.
I think there is obviously some concern about China, maybe a bit overstated at times, but there is a concern. If you look at it at a macroeconomic point of view, China is growing quite well at 6.5%. What has slowed down a bit is the auto growth in China has slowed down. The growth in appliances has slowed down, but the growth in the real estate market is still quite strong, right? So hence you're seeing the impact more on flat products, which is more dependent on auto and appliances, than in long products, which is more dependent on construction. So there's been a little bit of unwinding of positions in China, and there's also a lot of speculation going on the cuts in China, and there is a view that the cuts announced by the government is less than what people had anticipated. So we've seen the flat product prices soften by about $30–40 in the Southeast Asian markets. As far as its impact on India is concerned, I'm hearing of import parcels being booked into India. It's not that because the domestic prices always are a bit on the higher side compared to the import landed prices, because when you import you run the risk of having material come in 2–3 months after you book the order, unlike in domestic where you get it immediately. So that's playing out. So as of now, the imports, I'm told, in December is forecasted to be about 600,000 or 700,000 tons. So there will be some sort of impact of that in the domestic markets, but I'm positive given the fundamentals of the Indian economy, the fact that the economy is still quite strong, and I hope the prices stay up. It's our job to make sure we get the best prices we can.
Tell me a bit about pricing. Where is the power? Which sections of the product lineup do you see more premium when you are talking about flat products actually seeing some pressure at this point?
So the long product prices have been more stable than the flat products, and long products again depends a lot on the infrastructure activity, and a lot of spending continues in the infrastructure space, and we believe that a lot of it will also happen as a prelude to the elections when a lot of activity will happen there, right? In terms of flat products, again, India is different from the international markets because auto demand in India is still quite strong, right? For us, obviously, from a Tata Steel point of view, our strongest franchise is the B2C business, which is 20% of our revenues, where we really sell through a distribution network and reach out to individual customers who buy Tata Steel because they trust Tata Steel, and they're not customers who are looking at what is the international price. They're consumers who want 3 to 5 tons of steel, and they are happy to pay a premium for Tata Steel because they trust Tata Steel. The other big franchise for us is the automotive franchise, which is about 20% of our revenue, where again quality is more important than anything else. So it's not about what is the cheapest steel available, but who amongst the quality producers can give me the best price, right? So you're competing with 3 or 4 people in India and globally. And there again, an auto company typically looks for stability of supplies, stability of quality. So I think these are 2 of our strongest franchises, account for 40% of our revenues. And the 10–15% of our revenues comes from a downstream business, which is a value-added products, services. So that again is reasonably stable. So that's why Tata Steel tends to have numbers which has more stability than some of our peers, because we have fairly strong franchises in these areas, and also the fact that we are able to sell most of our volumes in the domestic market is indicative of the equity that we enjoy with our customers.
Do you see any respite as far as traditional cost pressures are concerned, keeping in mind the outlook as far as iron ore prices are concerned? Your comments on that?
Well, iron ore prices, so if you look at raw material prices globally, they have not corrected to the extent that the steel prices have come down over the last few months, which is leading to a squeeze of spreads for steel companies who are buying all their raw materials. Tata Steel has an advantage because almost all the iron ore we use is our own, what we mine, but 70% of the coal we use is what we buy. So if you see coal prices, they are still over $200, which is very, very significant, and coal is the biggest component of cost for a steel company, right?